Alright, so we're live. We're back live. Welcoming everybody back. Thank you for joining us. It's going to be a fun Tuesday today. It's nice to have everyone. I see you guys again on a Tuesday, not on a different day. So we'll wait for some guests before moving forward. So hold up, we'll fix a few things. Okay, we're back. Uh, we'll, Apologies for the quick technical difficulty. We adjusted a few things. We're here for the broadcast, but we're back. Like I said, we're back on a Tuesday. Past few weeks have been on the different days, but Tuesday is a nice day to start because we can forecast or we can check a few things that will be coming up for the week. So no, 2 weeks ago we discussed some fundamental information, so fundamental data. So let's catch up for some people that will be what this week we could look forward to. So while we're waiting, I'll show you guys some of the things that will be happening this week. And some of the things that have happened already. So we're back to this Forex Factory. So if you guys are a trader, if you guys are actively trading, it's always a good habit to check Forex Factory to see which information will be coming up. Like for example, for today. There's still gonna be some information regarding Canadian dollar. Their CPI, median CPI, and trimmed CPI will be discussed later today. So we'll be checking on that. So for tomorrow, there's gonna be a caveat. By the way, this is on Hong Kong time, Hong Kong Standard Time. So adjust your schedules or adjust your time zones accordingly. If you want to see it, usually when you go to the site, it already fixes on wherever you are. But in case you want to move it or you want to change the time zone or the expectation, you can always click on this button and adjust whatever you think would be better for you, for your understanding, or for your schedules in the market. So like I said, later today, there's going to be information with Canadian dollar, some median CPI, trim CPI. Tomorrow we'll have some meeting with FOMC meeting at 3 a.m. Hong Kong Standard Time. Unemployment claims. This one is a big one for those who are US dollar focused. You might want to check this out. You might be aware there's not a lot of difference for the forecast and the predictions, but sometimes just a small difference in the expectation moves the market accordingly. So for Thursday, we have Canadian minister having a speech. There's gonna be a lot of information for the euro. So with regards to that, There's gonna be information on the British pound. If you can see during the latter part of the tomorrow around 5:30, you might want to consider whenever. For those who are fans of the British pound, the beauty about trading in British pound is that there's a lot of movement, or there's a lot of British pound is probably the highest volume or the highest movement or the highest possible uh, pip movement with regards to making money in the market. Of course, there's a high because of the high volatility. You might want to check your trading strategies or your risk management strategies with regards to trading that one. For Friday, there isn't much heavy data except for the flash manufacturing and flash services PMI for the US dollar. And it's a bit late for my taste specifically, but for those who are in different time zones, you might be able to catch this. The flash CPI and flash manufacturing, you might be able to get some information, or you might be able to position yourselves on for a good trade on Friday. So a lot of nice data coming in this week. There was already huge data that arrived and which moved the market a bit. And if you look at the chart, so this is the euro against the dollar. There's a lot of movement already. So we will check that out. Okay, so since we gave time for those who wanted to catch up, it's time to go to our main topic, which is technical analysis. So a few weeks ago, we tackled a bit on this because we discussed time frames when it comes to trading. We also discussed fundamentals in data, which is the other aspect or the other leg that you need to focus on when it comes to trading. And then last week, I showed you guys some of the trades that I did, some of the positions that I made in the market the past few weeks. I think it's just a couple of weeks, but you guys were able to see the type of trades or the type of positions that I like to do, and some positions and some of the reasoning why I chose to do some of the other positions. So for this week, we'll be discussing the technical side, or if you guys were looking at the market, more on the trading, or for those who like the colorful data or the colorful size and writing in the market, you might enjoy this, because this shows, this will explain some of the things that we do, what are the lines that hopefully would make sense to you. Hopefully I can share with you guys the information and share with you correctly in a way that you would understand them. So let's look back in our chart. So here we are, since we discussed the British pound against the US dollar, here is the chart of the British pound against the US dollars. As you can see, there's a huge counter movement. It has been going down for the past few. Wait, let me show you guys. So the market has been moving in a different direction. Previously, it was going down, but there's a huge movement and a huge change in the development in the market. So the market has shifted. So one of the things that I'll be discussing is symbols or signals, trade patterns. And one of the trade patterns is this one, which when there is a specific trade that usually is just a quick cross and not a lot of thickness in the candlestick. It's called a doji. And usually when you see that, it means there's a market shift on the movement of of that specific pair. So this one, it's not a full doji because there's still a thickness in the middle, so there's still a line there. But you can see that the market tried to shift down and it shifted back up to the original price. So it was, or it signaled a high chance for the market to shift back up to become a bullish market. So that's something that we will be discussing a bit. But for now, let's discuss first what is technical analysis. So brief definition is it's a method of evaluating and predicting price movements in financial markets by analyzing historical price charts, trading volumes. It relies on the assumption that historical price movement patterns tend to repeat themselves. If you guys are always if you guys have been studying, or if you guys follow a lot of gurus in the market or in the internet, or a lot of trading advice from various websites, you will always notice that there's a disclaimer saying that past performance does not guarantee future results. So, but that doesn't mean that we cannot learn from historical data. So if there is, for example, with the British pound, if you see that they are moving at a certain range, or they're showing a certain personality or certain style that you can see in the market, there's a high chance or high probability that that would happen again. So you might want to, so that's the basis, or that's the reason why we have technical analysis and technical data for ourselves. So key components for technical analysis is number one, charts. So if you are the type of player or type of person who enjoys charting, so you can put a line. Let's remove this. We can, for example, we can put a line, let's say here, and then we put some markers here. Usually this is the most fundamental of the markers or the charts, which is the support and resistance levels. It usually means that these are the levels that you want to take note of, that in case the market moves, you will be able to take advantage, or the expectation is that once it breaks a support or it breaks a resistance, it goes to the next resistance, or it goes to the next support. So in case, for example, the British pound, if it breaks this level over here, so it breaks this level over here, then you can expect it's a high probability that the next movement will be to reach here. So if you mark that out, that's gonna be around 800 pips where you can take advantage of. So for those who are relatively new in the market, that is something I'll be discussing in one of the most basic. I remember when I started, just using support and resistance is enough for you to make money in the market. So if you want a quick way where you don't have a lot of, or where you don't use a lot of analysis on data, maybe just using support and resistance might be enough for you. So later we'll be discussing how do you choose, or how do you pick the support levels or resistance levels. Next are indicators. Usually these are moving averages, RSI or relative strength, moving average, the MACD, where the moving average convergence, and other potential trades. I'll show you guys an example, probably one of my favorite. Let me remove this first so that you guys will see the type of indicators that so market. So you can't put this in, you can't target it in. But as you can see, there's going to be additional information when you put in the Bollinger Band strategy. Basically, Bollinger Band is just a three, what do you call this? Three moving averages where you support all of the movement of the market, and some of them will show the trend line or the general direction of the market. So if you see that, you will be able to put in positions, or you will be able to get additional factors when it comes to getting into the market. So next is trends. Trends is a fundamental aspect of technical analysis. Trends can be either bullish, bearish, or sideways. Analysts use trend lines and patterns to recognize direction of the market. Something of note to this, that would be something with regards to the things that we discussed prior, a couple of weeks prior. Sometimes a trend in a short term, so for example, this one is 1 hour, might be different from a trend that is 4 hours, or it might be different for a trend that is on a daily basis. That is because sometimes there are micro trades that could be done in the market. So you might want to consider, or something that you want to look forward is, what is your general strategy? Are you going for a long-term trade or a short-term trade? So let's choose a different pair. Let's go for USDJP. So as you can see in the market, this is the USDJP1 JPY on a daily basis, and then on an hourly basis you can see it, but you can see the movements with the 5 minutes. So it's just a macro perspective about what's happening or what's moving in the market. So whenever you set up trend lines, you want to use, you just have to pick the highest points whenever you position it. So for example, this is one trend line that you can set up, and then you can position another one here. Alright, there. So if you see, there are times that the market breaks the trend line, and even though it has broken the trend line, it still followed the specific, it still went back to the original trend. So sometimes when it breaks, it goes all the way forward, but that's what we're saying, that you can use technical analysis as a means of not really predicting, but as a basis for future plans. Like for example, this is the market was able to move back to the original trend after it has broken the upper part of the trend line. So you might want to, so whenever using trend lines or any of the technical analysis, make sure that you always combine it with market sentiment and fundamental information, so that whenever it breaks, it doesn't necessarily mean that it's gonna break all the way, or the market shifted all the way, but it sometimes means that there's just opportunity for you to take advantage of a few pips before it goes back to the original trend. So that is an example of the trend line. Support and resistance levels. We've discussed, I've already introduced it to you guys, the concept. But basically, you want to look for the parts of currency pair where they consolidate or where they go for sideways. It usually means that when it reaches that level, so for example, this is our resistance. It seems that this is our resistance level, and then this could be the next one. So yes, so as you can see, these are the parts where the market usually coalesce, or they try to come together, and sometimes this is a marker for market sentiment. So usually the market shifts when all of the traders decide to sell a currency pair or to buy a currency pair. So whenever something like this happens, you would see that the market's buyers and sellers are usually equal in number, and the market doesn't move. It just buyers here will balance out the sellers here, so it doesn't move the marker until until a fundamental data gets shown, or a technical analysis or a technical barrier has been broken, and it moves the market, and everyone decides, for example, at this point, everyone decided to sell on the USD against the JPY. So it shifted everyone to the selling position, so everyone went. So the market went along with the downward trend for the USD JPY. So key point with regards to support and resistance levels, you put them in the highest point or the lowest point of a specific candlestick, and depending on where they are and where you position it, you will be able to see the consolidation area of where the traders, or where you see the traders are hanging, or having a problem, or enjoying themselves with the trading, or not being able to decide yet, or the market not being able to decide yet whether or not they'll be going for the buying side or the selling side, or which trend they are moving forward with regards to the position in the market. So another thing of note for support and resistance levels is that usually your support, when it gets broken, it becomes your next resistance. So even if it doesn't necessarily mean that this is, so let's just move this here. So for example, this gets broken, this becomes the next resistance for this video. So excuse me. So this moves up into the market, while this is able to position itself on the as the new resistance for the new trend. So as long as you are able to stick with the support and resistances on the right track, you might want to keep them, because again, it could go back historically. So let's go back. See? So if you see the support and resistance levels, it always comes back to that. It always comes back to that specific level in some point. So during this time, it's a different trend. So you should set up a different support and resistance at these levels. But as you can see, data or historical data helps a lot with regards to the strategies that you can use in the market. Now, it also support and resistance levels also changes depending on the time frame. So as you can see, during the early chart that we saw, it was mostly on this trend. But currently, since the market is already in the lower part, which is in the lower part of this market, we should be able to position new supports and new resistances with regards to the strategy. So if you're on a daily basis, your daily chart, so you might want to change your support resistance levels to different positions. So move the support and resistance levels to the proper positions, like here, here, and then here. So as you can see, it's entirely different. It looks entirely different from the usual that we've been doing from the hourly chart. But like I said, it depends on what type of trader that you are. If you like a long-term trend or a short-term trend, it depends on your strategy. So that's support and resistance levels. And lastly, before we switch it out, there are also chart patterns. If you've heard of head and shoulders, if you've heard of earlier, I discussed the doji. Doji is the cross where it's shifted. The hammer. There's the morning star. There's a lot of different versions of chart patterns. Personally, I do not use it as much. I just use a few that I think, but sometimes I just focus on the what do you call this, the support resistance as a basis, the fundamental, and then I use trend lines and the indicators as my basis. So sometimes I check the volume of the currency pair, and then sometimes I check the RSI, how is it positioned in the market, and then after that I just put positions basing on both whatever technical analysis or fundamental, mostly fundamental data that I think is going to happen in the market. So welcome everyone. Feel free to ask any questions if you are understanding everything that I'm saying. I know this part is a bit, I would guess this is the boring part when it comes to trading, is the looking at the charts. I mean, who enjoys watching? You know what, let's check out gold. Maybe you guys will you'll enjoy it more if we go with gold as a basis. Where is that? Crypto indices. So you might want to check for other Alright, so guys, right, this is the gold chart. It's a daily gold chart. Let's just go back to my favorite chart, which is an hourly chart. Okay, so what does technical analysis help you with? What is its role in analyzing the forex market? Here are some information. It helps you forecast price movements. So, like I said earlier, because it helps you see familiar patterns with regards to currency pairs. It helps you see the history that the currency pair has a certain strategy or certain personality when it comes to moves in the market. It allows you to see whether or not the market will move in the same direction. So I would say, since usually it's just a 50-50 chance, but you are shifting the percentages in your favor if you use the technical analysis properly. So I know there are some traders that are purely chartists, they call themselves, and they enjoy the technical part, reading and analyzing, putting all the if you guys watch one of my colleagues, he's our professional chartist in the website. He usually shows you and gives you information on how to trade with charts. So that's one of the things that I would encourage you guys to continue coming and joining us here at Trading Star. We are not just sharing some information, or sometimes we share esoteric information, or sometimes we share broad view information with you guys, but sometimes we also share technical, very minute information. So it depends on you guys which you find best that will help you trade into the forex market or CFD market for those who are into other pairs. So it also, so aside from the forecast, it allows you also to time the entry and exit point. So how does that work? Let's see. Yes. All right. So like I said, let's change the hour to, let's change it to 2 hours. There you go. So let's go with the basics again. Support, resistance, position resistance levels, and depending on that, this should be a good example of how you are able to time your entry and exit point. So for example, at this point, this is the position, this is a live position in the market. And we are seeing that the gold is trying to break the 1993 level. So if it does break the 1993 level, it might be a good signal for you to buy, because the next resistance point is here. So considering this, considering that our support and resistance levels are solid enough, if it breaks this position, that could be a good time to buy into the market, because the next position would be after the 993. It will be on the 2003, which gets you about 10,000 points in trading. So that's a huge opportunity for you guys into the market. But until it reaches that point, as you can see, the market has retrenched a bit, has pulled back a bit, which means this resistance is still holding up. So it means that now is not yet the time to buy. So for those who are using trading, or for those who are for those who cannot wait into the market, so let's say you are in this position and you're just waiting for the market, and then something comes up or you don't have the time, you can always put in a pre-order wherein once it hits the 1993 level, you can put in a buying position and you can put your stop loss. Usually on the it depends on the strategy. It depends on your risk reward ratio. If you want, using this as an example, if the target pips is, let's say, just half of it, or let's say the target is around 1,000 pips, you can put your stop loss at around 500, which would give you a decent risk reward ratio of 2:1. But that's probably the most basic. But for those who are always actively trading, 1:1 ratio is an okay, acceptable position in the market if you are actively trading. So again, we are discussing a lot of nuances when it comes to specific trades, and I hope you guys are catching up. A lot of these information have been discussed in our other videos, so feel free to catch up on them and make sure that you watch all of our videos, so that you will be caught up about the information, or caught up about the things that we are discussing, because a lot of the strategies that we are discussing all combine for you to have the best chance in making money in the market. So I understand that some of you guys only want to focus on the charting part. Some of you guys only want to focus on the fundamental part. You can do that, but you are lowering your chances in making money in the market. And I know that sometimes you're gonna feel that you are learning in the market, but if you do not stick with the basics or the fundamentals of risk management and taking advantage of, or making sure that your risk reward ratio or some of your positions in the market are not tight, The market will humble you with just one, sometimes with just one mistake. You can lose your entire portfolio. So I hope it doesn't happen to you guys because it has happened to a lot of traders. It has happened to me as well. So uh, I hope you guys learn from us so that it doesn't happen to you guys. So that's it for the timing and exit point. For risk management, like I said, since this allows you to predict, and this is just using support and resistance level, you can already do a lot of things or a lot of strategies just by having the concept or the knowledge of using support and resistance levels. So I've emphasized some of the guys that have been asking me with regards to what is something that they can learn. Just learn support and resistance levels, knowing how to read the market, knowing where to put your support resistance levels. You'll be surprised how much you can do with the market with regards to position strategies if you have correct fundamentals, which is the support and resistance levels. So another thing that you can do with technical analysis is you can also confirm some fundamental data. So, like, usually fundamental data coincides with some technical data. So let's go back to USDJPY because that is the most recent information that we have been using. So here is let's go back to the RD chart. So as you remember, some of the data with regards to the US dollar has been negative with regards to the fundamental. So as you can see, because of that information, the movement of the market already shifted downwards. Now, that doesn't mean that the market will continue shifting downwards. Sometimes the traders, or because of the market sentiment, that is something that we haven't discussed yet, but because of market sentiment, the market shifts to the oversold or overbought levels because of all of the markets is shifting. And whenever a trader or traders shift in the market, they take advantage of all and they move out and pull out from the market, which shifts the market back to the other direction. So sometimes when you see a retracement, even like for example, there's a huge movement here. If there's a retracement in the market, you would know that some traders are starting to believe that the market is shifting, and some traders coincides with that they take advantage and they pull out of the market. They sell their positions on the US dollar against the yen. So that's something that again helps you with the information with regards to the fundamental analysis and reading up on what's happening in the market. So as we discussed earlier, it also follows on the trends on the market. This one is an obvious one, a bit obvious one. Let's look for something less obvious. Let's check out the Canadian. Let's check out the Canadian dollar. So this one is a bit different from what you saw. So USDJPY, as you remembered, it was a huge strong downtrend. This one is a bit more nuanced, it's a bit more sideways, but with a general downtrend direction. So with that, sometimes you want to check out first from a broader perspective. So check it out from, let's say, from a 1 week chart. Instead of the usual trades, we check out the daily chart. So you can see it's a bit volatile when it comes to the movement in the market for the daily chart. And let's go back to hourly. So here, so if you check the general direction of the before this huge movement, the general trend has been upward. So let's make a trend line. For example, the trend line has been going up and here, there. So during that time, the market trend for the dollar has been on a strong uptrend. There was a huge, when it broke at this point, people started to think that the movement is different and the market might shift, but it only broke for a few hours and then it went back up again. And usually it comes out to that where it follows a specific trend until it breaks. Once it breaks, one strategy that you can do is just follow a trend until it breaks. So if you had followed this trend and let's say you bought at this price, which is around, what is this price? Let's check. Let's say you bought at around this price over here. Let's say you bought during this time where the market shifted and pulled back, and you bought at the 36.27. If you continued following the trend, you would have reached this level. Probably, let's make it safe and put it around here. So you would have reached at around 37.5. So that's around 10. Again, another 900 pips that you were able to take advantage of. So even if you lose a bit of money here, the overall direction or the overall trend or the overall trade that you did made money. So sometimes that's one strategy. A trend line will allow you to put in positions in the market wherein you will see that you have just following the trend and making money off of it. So one of the notorious lines with regards to trading has always been the trend is your friend. So there's a reason that it has stayed, that information or that quote has stayed with us for so many years because it holds true. So with that, that was the historical data. So how do we chart that out with the current analysis? So let's see. This is the current trend for the US Canada. Alright, and let's check for the bottom part. I think it's a bit safe to put it here. So as you can see, the trend is slowly moving, is slowly widening. Usually when this happens, you would see that the market will eventually consolidate and have a tighter trend afterwards. But since it's a general direction of this one, you might want to you might want to consider moving your analysis to become on a tighter basis, since you know that the trend is going outwards. And it's very rare that the market would keep up with that kind of projection or that kind of direction. So it usually tightens up at some point. Usually it comes in during fundamental, when there's a fundamental information. So hopefully you guys were able to listen on the fundamental analysis and fundamental data analysis of what we did 2 weeks ago. If not, I suggest you guys watch it so that you would learn on what's happening with the market. Right. So our next idea would be, well, we wouldn't be trading Star if we did not discuss risk management techniques for you guys. I know you guys are already sick and tired of hearing some risk management techniques from us, but we want to instill this discipline in everyone with regards to risk management because you want to be like we always say. We understand that you guys have different strategies. We understand that you guys have different plans with regards to moving in the market, but putting positions willy-nilly in the market is going to remove a lot of, you're gonna lose a lot of your money. So I've seen people lose $100,000 in a week. I've seen people lose $20,000 in a few hours just because they didn't emphasize their risk management techniques quite enough. So, number one rule when it comes to technical analysis, determine your position size. So, this one I haven't discussed prior, but it's always a good bet to only, since the problem with technical analysis is sometimes we become overconfident with regards to our positions in the market. Let's say we see a huge trend. Let's look for a different let's look for a different opportunity in the, let's look for the euro. So let's say you become overconfident. Let's say you see this and then you set up your trend line. Let's say you set up your trend line and it looks something like this. There. And then you see this happening right now. This is live, by the way, so in theory, it has broken the trend. But we already saw that during the USD JPY, sometimes the trend might break, but it might come back. It still might come back to the original trend. So how do you do this? Since it's a strong break, which means there's a thick candlestick with regards to the movement of the market and the general direction, you might be so overconfident that you put in half of your position in the market, or your lottage could be around 10, 20, or maybe even 30 or 20 lots with regards to your trade in the market. So be caution with regards to being overconfident with any one trade. One strategy has always been only risk a portion of your trades. I know some traders whose portions are around 5, the maximum that they would give is around 5%. But as a general rule, 2 to 3% is the ideal trading position per trade, because like I said, we don't always know what will trade in the market. But as a golden rule also, it's always advised for new traders that 2% should be the one you should follow. Every position should be only be 2%. Every position should only be 2% maximum of your total portfolio. So if you have $100,000, that's around roughly $2,000 in exposure to the market for every position. Now, how do you take advantage, or if that's too small for some of you guys, that's where the risk reward ratio comes in. See, it always comes back to the original topics, or it all comes back to the one formula or one huge pot of strategy that you combine and make in maximizing the profit that you have in the market. So I hope you guys understood that. That would make sense for you guys with regards to positioning or your position in the market. Number two, make sure to set your stop loss orders. Stop loss, like I said, just by using support and resistance levels, you can already predict, or you can have a safe locations wherein you can put your resistance and support levels. Make sure to take advantage of that information. So, like I said, just by using support and resistance, you already have a huge amount of strategies that you can apply to your trading positions with regards to the market. So, always check the volatility considerations, the indicators for. Let's see. Right, so this right here is volume of the data. It usually depicts, I don't usually use it, but something for some of you guys, you might be able to use this. You might want to check the volume, because volume means how many traders are trading this specific pair and how many traders are active during the specific pair. So if you can see, active traders in the market are gonna be moving the currency pair along a lot more than usual. So making sure that you check volumes with regards to a specific currency pair or a specific position that you are in helps you out in the market. Next, you want to check your, as I discussed, your risk reward ratio. So simply put, for every 1 pip that you risk, you are gaining 1 pip back. So that is the easiest explanation for risk reward ratio. So if you want a huge opportunity in the market, a huge movement in the market, 1 pip should be up to 3 pips or 4 to 5 pips, which means although those opportunities are a lot rarer in the market, there is going to be a lot of big movements in the market where you can see the opportunities that you get. You can find a 1:5 ratio. I would suggest that's always a good trade to do, because it basically you lower your risk to 20% from that original position. That's a lot of math involved and a lot of technical information with that, but that's the general gist of the risk to reward ratio. Alright, making sure that you review your trade setups. I know there's going to be a lot of indicators, there are a lot of that you can use in the market. Making sure that you understand which ones make sense for you. Alright, let's remove this. Yes. So use of trading stops. Oh, this one is a bit a bit advanced, but for those who are in the market, there is, especially for those using MetaTrader, there's a specific position in the market wherein, let's say you bought at this point in the market. So let's say you bought at this point in the market. Yes. So let's say you bought at this point in the market, and since the market is going up, and then normally your original position is your original what do you call this? Take profit will be around, if you bought around here, your usual trade profit will probably here, and your usual support or usual would be on this level. This will be your stop loss levels. So trailing stops means that when the market moves up for your position, the trailing, your stop also moves up with you. So even though the original position was here and the market position has already moved, the market or the original ratio that you did moves up with you. This takes advantage of takes a huge advantage when it comes to trends. So if it moves up, you move along with it. So it moves here. Your support, I mean your take loss and your take profit and stop loss also moves up. So as long as the trend is continuing, your take profit also goes up and your stop loss also goes up, which means the original trade, the original position sticks and the ratio sticks. But as long as the trend is following you, you have an exponential, theoretically an exponential or unlimited amount of profit coming your way. So I can't show you guys right now the use of trailing stops specifically, but that might be something that is an interest for some of you guys. That could be an indicator, or that could be something that we can show you guys in the future, or maybe a topic for one of my colleagues to share with you guys. So let's just remove this and this. Alright. And lastly, a couple more information. Make sure that you avoid overtrading. Sometimes you enjoy so much that this new information helps you guys out. Never overtrade. Always make sure that you combine the information or combine the risks and the risk management that we've shared, and of course continuously monitor some of your trades. I know that you guys, I know we've discussed that the strategies that we can adapt so that you don't have to monitor the trades on a hourly basis, or sometimes you can just position yourself and then go live your life and and do whatever you want. But it's always a good idea to monitor every once in a while. There's a lot of options using downloading apps in your phone, so that when you're outside you can check if the position you made have made money, or if they're still active in the market. Because sometimes again, all the technical information that we are getting, or it might be an overconfidence on our end that we are making that money, when in fact the market has already shifted to the other end. Okay, so that's it for today. Honestly, there's a lot more to be shared with regards to technical analysis, and this is something that will never be covered in an hour or even 3 hours, because there's a lot of information with regards to technical analysis. But like I said, the only technical data that you can use, or that you would need to start with, that has the most advantage for you guys, is learning the support and resistance levels. So hopefully you guys are able to get some nice information, and some information that you'll be using that you can make money out of. Will be, if there's, let me just check the chat a bit. If there's questions with regards to what's happening. Okay. Alright, I believe that's it for today. Feel free to check out the other streams. Feel free, like I discussed, check out our past streams with regards to other information that helps us out in the market. Remember that what we want is for you guys to become for trading to become part of your lifestyle and not necessarily the trading taking over your life. So good luck, have a great day, have a great week in trading, and thank you. See you guys.